और रिलायंस के जो शानदार नतीजे आए उस पर इस वक्त प्रेस कॉन्फ्रेंस हो रही है, सीधा आपको लिए चलते हैं।
For just under 25% of consolidated EBITDA, and we have taken another major step in terms of demerger of our fiber and tower assets, creating the path for an asset-light geo and value creation for our shareholders. Let's now reflect on the macro trends that we expect in 2019. Firstly, everything that we have seen and heard so far points towards slower global growth, both in US, Europe, and China. The China numbers of growth at 6.6% are supposed to be at a 28-year low. Closer to the factors that affect Reliance's business, as you probably know, crude prices were up and averaged nearly $70 per barrel in 2018, putting a pressure on the crude markets, which became tighter towards the year end. We also saw new capacity in cracking come up globally. US with 3.5 million tons of new cracking capacity led that. As far as refining is concerned, we saw record refinery runs in the US hitting 98% at times, leading to record gasoline production and putting some pressure on gasoline margins worldwide. Light-heavy differentials were also narrower, which affect complex refining simply because of lower supply of heavy crudes from Venezuela and Iran. We are very levered because of our consumer business to consumption spending in India, and that was really good, and we expect a 12 to 15% growth in that even in 2019. As far as petrochemical demand is concerned, we saw 7% growth in both polyester as well as polymer chains, giving us confidence that we will continue to benefit from our market leadership in India in both these chains. A quick summary of our consolidated financials. Revenue at 6,22,000 crores, up 44.6% compared to last year. Record production of petrochemicals, 22% higher crude prices, but most importantly, the revenue growth in retail and digital services gave this big jump of 44% over last year in revenue. PBDIT on a consolidated basis up nearly 27% to 92,656 crores, again primarily coming from our petchem business and the consumer businesses. Depreciation was higher at just over 20,000 crores, 25% higher than previous year, coming out of new capacity in hydrocarbon businesses and also increased depreciation charge from our digital service business. Same story for finance costs, jumped up from 8,000 to just over 16,000 crores as we commission new capacities both in our energy and consumer businesses. As a result, net profit up from 35,000 crores to nearly 40,000 crores, up nearly 13%. Net debt, an important measure, is up only 9% from 1,41,000 crores to 1,54,000 crores, arising both because of earnings and because of the deleveraging obtained through transfer of debt to fiber and tower companies. Adjusted return on capital stays stable at 13.5% and is among the highest in our global peer group. A quick look now at our standalone financials. Revenue crossed 4 lakh crores standalone, up 27% year on year. A combination of oil price increase of 22% and higher volumes from petrochemicals. PBDIT up 12.9% from 60,000 to 68,000 crores. This again, as we will see later, is a combination of both higher volumes as well as an uplift in the integrated polyester margins. Depreciation up 10% to 10,558 crores. Interest costs nearly doubled from 4,600 crores to 9,700 crores. And net profit, a record at 35,163 crores, up 4.6%. Let's look at where we got the earnings from. And when we look at segment EBITDA this year, refining and petrochemicals combined account for 70% of consolidated EBITDA. Organized retail accounts for 7%, and digital services account for nearly 18%.